Welcome back. Yesterday was a range-bound session for our markets. The Nifty moved around in a 150-point band and finally ending marginally higher at 24,667. But what are the cues? What are the stocks you need to watch this Thursday morning? CNBC-TV18's list of top stocks for the day is coming up, and our team is joining in. And the big one will be Eicher Motors. Sudarshan, numbers largely in line?
That's correct. So I'm going with green for Eicher Motors mainly because of three reasons. First, company's focus on growth over margin has been playing well. Second, heightened competition situation is behind and the company is the biggest beneficiary. And third, in this premiumization trend, company would benefit the most. Now, but the question is, can the stock see the profit booking? The answer would be yes. And it's on the back of first, margin has been below expectations for third straight quarter and valuation remains rich. Now coming to the headline numbers, profit was up 27%, revenue has increased 23%, both higher than expectations. EBITDA has slipped 11% and margin was down 250 basis points and both were below expectations. But market share in more than 250cc segment where company is the leader has gained 100 basis points year-on-year, 100 basis points sequentially and 40 basis points year-on-year. Now about the outlook, company is saying it will continue to see healthy growth and outperform the industry, and one positive part is in the urban area, company is saying the positive sentiment is returning.
Okay, all right. Good commentary as well. Thanks a lot, Sud, for joining in and giving us that update. But let's hop across to Ekta. She's here to tell us about Lupin. Ekta?
Thanks for that. Well, yes, Lupin came out with its numbers late last night and revenue, and it looked good. The revenue was up around 12% odd. The street was anticipating around a 12% growth. Margins came in at around 22%. Street was anticipating 21.8%. And overall, the profit was higher than estimates as well. So that came in at around 794 odd crores. Now, in terms of the key geographies which the street was looking at, the US business came in at around $245 million. This is compared to $209 million year-on-year and versus $235 million last quarter. So higher year-on-year as well as sequentially. So positive news coming in on the US business. India was up around 7% odd year-on-year and growth markets were up around 30% odd. So overall, good set of numbers coming in from Lupin. But what is the US trajectory going forward is something that the street is going to look out for in terms of commentary.
Okay, all right, got that. Ekta, thanks very much. So Lupin is going to be on our radar. More numbers, Tata Power and Torrent Power. Vivek, good morning. How do they look?
Well, good morning. Tata Power, well, operationally good set of numbers, a 25% year-on-year growth as far as the profitability is concerned is something that the street clearly will like. Well, as far as the profitability mix is concerned, what's clearly changing as far as Tata Power is concerned is that the share of the coal JVs in the profitability is reducing. What's increasing is the share of the renewable energy as well as the share of TP Solar, which is the solar cell and module facility. That's clearly ramping up, almost 90% capacity utilization. Well, talking about the numbers themselves, revenue is higher by 8% on a year-on-year basis, EBITDA higher by 39%, EBITDA margins quite strong this time around 19% versus 14.7%, and profitability, like we mentioned, higher by 25%. Now, the solar EPC book remained very steady at a little over 11,380 crore. What is it that the street, will be a little disappointed about? Well, the company had set aside a capex of close to 20,000 crore for FY25. They've achieved around 16,200 crore, indicating that there has been a delay as far as capacity addition is concerned in the renewable space. They had a target of 1.4 gigawatt, have achieved close to 1 gigawatt. This is in line with industry trends where there have been issues, and this is something that we will quiz the management further. FY26 capex guidance quite strong at 26,000 crore. Expect green as far as Tata Power is concerned today. Torrent Power, on the other hand, against consensus estimates, is a clean miss. It's been a muted side, and the profitability mainly boosted by a one-off. There has been a reversal of deferred tax liability of close to 637 crore. Looking at the numbers themselves on a year-on-year basis, largely flat, down 1%. EBITDA up 2% on a year-on-year basis. EBITDA margins up 50 basis points. Profitability, well, aided by one-offs, quite higher. What aided the performance this time around? Gas plants did very well. However, the renewable energy led by lower offtake is something that did do quite well. So Torrent Power expects some red, Tata Power some green.
Thank you very much for that. In fact, we've got the management of Tata Power joining us at 9:30 a.m. for the Q4 earnings. But moving on now to Muthoot Finance. Big jump seen in the company's profitability, perhaps on the back of the rise in gold prices. Vamakshi is here to give us the Q4 lowdown.
Well, good set coming in from Muthoot Finance. NII stood at 3,355 crores. This is an uptick of almost 6% sequentially and 32.5% on a year-on-year basis. The NIMs too for the company have improved to 7.3% as compared to 7% sequentially. The AUM is also growing at a very healthy pace, up almost 11%, much faster than the growth that we saw in the third quarter. Impairments at 413.5 crores is down almost 3% quarter-on-quarter. The stage 3 assets to loans also, were lower at 3.4% as compared to 4.2% on a quarter-on-quarter basis. As far as the outlook for FY26 is concerned, the company appears to be quite positive. They maintained their growth guidance at 15%, and in fact, they believe that guidance could see some upward revision after the first quarter. They will be opening 115 branches under Muthoot Finance, and Muthoot Money will leverage 1,000 branches for gold loans. The key risk out here is the fact that any changes in LTV rules by RBI for NBFCs could be a negative factor. But overall, when you look at the numbers that have come in from Muthoot, it's a good set, going with the green for this counter.
All right, thanks for that, Vamakshi. Well, in fact, we'll have the management of Muthoot Finance joining us later on the show to detail their Q4 numbers. But Mangalam's up next. And Mangalam, going by the stock you're tracking today, you know what I'm expecting later in the day? A pizza.
Well, it is a pizza party. I'm not the one who will be treating, but I'm sure there will be a couple of team members here who would volunteer, raise their hands and say that they're treating us to a lot of pizzas. But be that as it may, Jubilant Foodworks, what numbers? 34% revenue growth on a consolidated basis, standalone revenue growth 19%. We knew that from their fourth quarter update. So what is it that the street was estimating? They were estimating for the EBITDA, margins and net profit. On all three counts, the company went ahead and beat street expectations. The street was working with an EBITDA number of 277 crores. The company went ahead and did 305 crores. And as a result of which, there was a beat on the margins and the profitability as well. How is it that the company managed to, beat street expectations on margins despite the gross margins dipping by over 200 basis points? Because they curtailed other expenses and employee expenses as well. So there was some rationalization that took place out there along with operating leverage. Domino's like-for-like growth at 12%. Overall ordering activity grew by about 25%. And at the same time, delivery, which accounts for nearly 73% of their sales, out there the growth was 22%. Dine-in was absolutely flat. And that's a positive because earlier few quarters, we had seen a decline in dine-in. So that decline seems to be arrested with strong growth in delivery and overall ordering. That sounds like a pizza party.
Oh, God, we're all hungry already. Remember, we haven't had breakfast. We don't mind early pizzas as well. Mangalam, just say.
Anytime
Thank you very
much.
Any time of the day. Thank you so much for that. Well, more numbers. Hitachi Energy seems to deliver another steady quarter. Vamakshi, morning. Tell us more.
Well, good morning, Surbhi. It's a good quarter coming in from Hitachi Energy, especially on the operational front. When you look at the revenue, that did miss what the street was expecting. Revenue came in at 1,883 crores. This is an uptick of 11%. But when we look at the operational performance, that has been quite good for Hitachi Energy. And that is because the margins have improved for the second straight quarter to 12.6%. Remember, the company had given a guidance of double-digit margins. For the full year, the margins are at 9.3%, but nevertheless, for the last 2 quarters, they managed to hold on to that guidance of double-digit margins. Net profit too, seeing a strong uptick of almost 62%, 183 crores, an uptick of almost 62% for the net profit. As far as the order inflow is concerned, that was also quite healthy. In fact, it came in much higher than what the street was penciling in. Order inflow came in at 2,190 crores, an uptick of almost 56%, and the order book too saw a very healthy uptick, came in at 19,245 crores, an uptick of almost 166% as compared to the same quarter previous year. And this is given the fact that there were a lot of HVDC projects that did take that the company did win in FY25 itself. So overall, when you look at the numbers, operationally led beat for Hitachi Energy, going with the green for this counter.
Okay, we've got this management too joining us on the show today, 9:40 a.m. So do tune in to listen in to N. Venu of Hitachi Energy India. But moving on now to Apollo Tyres. Sudarshan is now joining in. Sudarshan, a bit of a miss here?
It's a minor miss to estimates. Unlike CEAT and MRF company, Apollo Tyres has missed estimates, and both their major regions, AP, MEA and Europe, have reported muted revenue growth, while EBITDA and margin have declined for both the regions. Now, profit was down 48%, revenue has increased 3%, EBITDA for the company has fallen 19%, and margin has fallen more than 300 basis points, but it was largely in line with estimates. For APMA region, revenue was up 4%, EBIT was down 35%, and margin has come down to 7%. 7.2% versus 11.6% in the same quarter last year. And for Europe, revenue was up 1%, EBIT has fallen 43%, and margin has slipped to 5.6% versus 9.8%. But all the focus would be on auto because remember, internals for the tire industry have improved in last 2 months. So we'll have to see what exactly management says in the analyst call that's scheduled at 3:30 p.m. today.
Got it. Thanks, Sud, for that. Going back to Ekta. Ekta, Piramal Pharma, numbers look good?
Well, yes, revenue was up around 8% this quarter. EBITDA was up around 6% on a year-on-year basis with margins at 20.4%. Stable year-on-year, but improvement of around 500 basis points sequentially and a profit of 153 crores versus 101 crores year-on-year. So positive performance coming in from Piramal Pharma. They've crossed $1 billion in terms of revenue with 12% year-on-year growth. And they are on track, according to the company, to meet their FY30 aspiration of $2 billion in terms of revenue, 25% EBITDA margins.
Okay, all right. Ekta, thanks a lot for that. In fact, we'll have the management of Piramal Pharma who will be joining in during midday to detail their numbers. Ms. Piramal will be in touch with Ekta Batra here on CNBC-TV18. Well, there's a big OFS as well that we're tracking. Vamakshi is tracking that one. Vamakshi, tell us more.
Well, good morning, Nigel. Wendt India will be in focus on the back of that OFS. Its parent company is likely to sell up to 37.5% stake via OFS, including a green shoe option of nearly 7.5%. The floor price has been set at 6,500 rupees per share, which is coming in at a significant discount, almost 38% discount to the current market price. The offer size is at 487 crores. The OFS will be opening for non-retail investors today and for retail investors tomorrow. But, given the kind of stake sale that is taking place in the company and, the discount that the floor price is at, going with the red for Wendt India.
Okay, all right, got it. Thanks very much, Vamakshi, for that. So let's quickly recap our list of stocks to watch today. The ones that have positive news flow around them are Eicher Motors, Lupin, Tata Power, Muthoot Finance, Jubilant Foodworks, Hitachi Energy and Piramal Pharma. The ones that have negative news flow around them include Torrent Power, Apollo Tyres and Wendt India.